The People's Bank on China on Tuesday cut a key short-term policy rate by 10 basis points from 2% to 1.9%. That says the bank deals with disappointing economic data after the COVID-19 reopening failed to gain momentum. This is the central bank's first such move since August and follows the nation's largest banks cutting deposit rates last week, signaling that further monetary easing could lie ahead. Following the decision, China's sovereign bonds rose in price. Chinese property stocks listed in Hong Kong also rose, with developer Logan Group jumping 4.5% this morning and also Country Garden rising 1.19% on hopes of further stimulus and policy easing ahead. For more on this now, let's go to Susanna Streeter. She is head of money and markets at Hargreaves Lansdown. Many thanks for joining us today. So, Susanna, this is somewhat of an unusual move, right? A few days before another key policy announcement. Are we expecting further easing on Thursday?
Yes, certainly there is that potential, and the very fact that they introduced this move before that key decision on Thursday indicates, I think, that more stimulus could be on the way, really wanting to get on the front foot given the sluggish economy and the problems that China is facing right now. There had really been high hopes that with the reopening of the economy, of course, following those lengthy lockdowns during the pandemic, that China would power ahead and really help offset some of the weakness elsewhere in the globe. But certainly we've seen the recovery falter a bit. So even though exports did bounce back pretty sharply, they've tailed off. And so, of course, with the one losing value, that is better for China's exports, makes them cheaper, that's more in demand. But actually, the problem is there is weaker demand around the rest of the world for China's products, as well as domestic demand being pretty weak as well. So all of this is aimed at just one part of the puzzle, aimed at trying to increase lending, increase liquidity really within the economy, with the hope of boosting demand going forward.
We talked about a failed recovery, but I wonder, what are the weaknesses in the economic fundamentals in the country? What's prompted this move?
Well, of course, we've talked a lot about China's fragile property sector. We know the problems really have piled up there. And as well, there has been this expectation that actually Chinese exports would power the recovery, but they've been tailing off because of weaker demand elsewhere in the world. Added to that, there is caution among Chinese consumers. And so even though there had been this real drive, and that's continuing to try and increase domestic consumption, there is obviously still caution around, given the weaknesses elsewhere across the economy. And so I think that is why you're seeing this move now by the People's Bank of China to increase liquidity and try and ease some of the pressures on companies. And as a result, you've seen mining stocks lift a little on this stimulus news, with an expectation there could perhaps be more to come on Thursday.
Susanna Streeter, thank you very much for this update. And now let's get to other top stories from around the world. Toyota has announced plans to introduce high-performance solid-state batteries as part of efforts to beef up performance of its EVs. The Japanese car maker aims to launch next-generation batteries by 2026, focusing on longer driving ranges and faster charging times. The move comes as Toyota lags behind its rivals in the fast-growing EV market. U.S. exchange operator NASDAQ has agreed to buy software firm Adenza for $10.5 billion, marking its biggest ever acquisition. The deal will help NASDAQ expand its presence in financial technology and diversify its offerings. But shares in the company fell more than 10% as investors expressed concerns about the high price tag. And Manchester United's share price has risen to its highest price in a month, to over $23 apiece, spiking by more than 17%. The jump occurred after a potential takeover resolution that emerged on Monday night. Reports suggest that Qatar's Sheikh Jassim bin Hamad Al Thani had been successful in his bid to purchase the club from current owners, the Glazers. And that is all from Mrs. Finn.